Hello traders, today is the 11th of September 2013. The time in London is 21 minutes past 10 p.m. In New York, 21 minutes past 5 p.m. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.dayprotraders.com. The title of this video is Live Risky Day Trading. Alright, so I'm selling, okay, after this I'm selling now the New Zealand dollar, US dollar at 8130. Alright, remember that level, 8130. In fact, what I'm going to do now on this live chart, okay, I'm going to draw a line on my entry point, 8130. Alright, right there. So I'm going to color it into red, alright, on my chart. And as I told you, the title of this video is a live risky trade. It's a bit risky trade, but I'm going to explain to you why it's a risky trade. But I want to take it, alright? It's my decision to take this trade, alright? I'm going to use a stop loss of 30 pips, 30, alright? Why am I using 30? Because of the risk-reward ratio. I'm expecting, okay, the price to come back down even to this point here, alright? At least to the middle of the tall candle. Now, as I explained to you, it's a risky day trading, all right? So you know that this trade may work or may not work. So it's not a high probability trade, all right? It's not, okay, a beautiful setup, so to speak, all right? But I decided I make okay, my own decision, a rational decision to take this trade, all right? So I know what I'm doing and I'm willing to take this trade, alright? If it works beautifully, I will be rewarded, alright? But if it doesn't work, okay, I will lose 30 pips, alright? Alright? You see now? So what's happening here? Why am I taking this trade? Alright, we see here, alright, there is a resistance in the zone of 8175, alright? In fact, if you go, for instance, let's go to the 4-hour chart, okay? And I'll show you why I'm taking this trade, all right? I'm going to show you now. Watch it carefully. There's the one, you see here? This is a hot spot on the zone. Price changing direction here on the 4-hour chart. Okay, let's zoom into this chart so you can see everything clearly, all right? Okay. We do use the indicator, but when I'm day trading, I prefer to have a clean chart like this. So if you are a new trader, I use also indicator like everybody else. The indicator that you see here is the Bollinger Band 20 volatility to normal one that everybody's using. So let the price change direction here on the 2-hour chart, on the 4-hour chart, okay? So there's a resistance here. Again, the same zone, price change direction. Here again, it change direction again. All right? So there is a resistance here in this zone. So somebody is selling this currency pair in this zone, professional selling. All right, now you see, okay, so if I want to sell, at least I want to sell around a resistance zone, but I should take a valid sell signal. If the signal fell, I'll close the trade. Now, but what I'm doing today, because I know a lot of traders are doing this every day, and I want them to understand that the trader is the decision maker. So you may see a signal, you may decide not to take it. Why? You may decide not to take it because the setup is not reliable. Without a reliable setup, there is no winning trade. Okay? Another reason why you may not take a trade, so maybe there is a very important economy news like non-farm payroll or crude oil inventory is going to be released, all right? Or the time of the day is the gap periods, okay? Because of what you have seen in the past, you decided not to take the trade, okay? Sometimes you may decide not to take a trade because of other market participants. So some days we know that a lot of speculators will come into the market, moving the market ups and down. These are speculators. These are gamblers, all right? And they can mess up your trade. So professionals are aware of that. That's why sometimes when a market opens, professional day traders will not enter the market as soon as, okay, the market opens. They wait at least 30 minutes or an hour because they know that ordinary trader will jump onto the stochastic and trade anyhow, and they don't want these crazy traders, so to speak, though no one is crazy though, to mess up the trade. So because of another market participant, you may decide not to take the trade. Sometimes it may be only other, okay, another reason, maybe the market's ups and down, too much volatility, and you may say, I'm not going to be part of this. Or you didn't see your setup, because professionals are always trading their setup. So they don't see their setup, they just sit and watch. So there's nothing wrong to sit and watch. A lot of ordinary traders think that every day they should trade. Some days you look, there is no beautiful setup, you just there was one situation this week. I missed one gorgeous opportunity for a Euro USD. I was expecting, I know the Euro will go up to the, okay, the level of, where are we now? Okay. Where is the Euro USD? Go back to the equilibrium price level, all right? If you, those who are following us will understand what I'm talking about, equilibrium price level for the Euro USD. As I explained to traders, is you see the short-term equilibrium price. We know that the euro should come back. Okay, you see the green one here. This is my chart here. All my drawing, my apologies to traders. You see the green line here. So deep below the equilibrium price level, there's a high chance the price will return back to the equilibrium price level. So beginning of the week, I was expecting the euro to give me a nice pullback. It didn't do that. All right, it didn't give me the nicest pullback. So they were just pushing it, and I missed this opportunity. So what? All right. I knew it's going to go up, but it didn't set up for me nicely. I did not take it. All right? Okay? But if they did pull back nicely for me as I was expecting it, I will enter it and also be rewarded like these people, but they push it away, and I was not part of it. You see now? Let's go back again to the currency pair that we are trading. Now, some traders are new traders, some traders are advanced traders, but what we have noticed, it takes a lot of time for traders to understand what's happening in this messy market. So we are at a resistance level. This is one of the reasons why I'm taking the trade. I'm going back to again to the 3-minute chart where we start everything else. So the higher time frame commands the lower time frame. I'm going to talk a bit. As you can see, this my level is 8130. The price now above my entry point. So I can decide to close the trade and walk away right now, but I don't want to. So the decision is mine, the choice is mine. I am in charge of the trade. Okay? Okay? So this is very important for traders to understand. If you want to become a trader, the first thing you need to work on is responsibility, total responsibility, because money is involved. So what I say to traders, when we see a tall candle like this, very often this is caused by economy news. Economy news can propel them. So the price was going slowly, suddenly boom, up. Now it's going, okay, diagonal. Now, talking about market geometry that we were talking about before, diagonal move, vertical move, retracement to the opposite diagonal. But this is something else. Now we see the vertical move before the diagonal move. Okay? What did we say to traders talking about non-farm day trading? We highlight the high of the tall candle. We see that this all the time after economy news. But what I'm saying to you here, this is a risky day trading. So, because I didn't check the economy news before I take this trade, so I'm behaving like a new trader. All right? But the difference is that I know that it's a risky trade because a lot of traders sometimes don't even know that it's a risky trade. All right, but I know that it's a risky trade. We see a tall candle, we highlight the high, the low, and the median line. It's just automatic. We don't think of it, we just do it all the time. On every time frame, we see that. It's very important for us. So we see a vertical move and a diagonal move. Normally we know a diagonal move and a vertical move, retracement to the opposite diagonal. But here we see a vertical move, diagonal move. All right. My my expectation is that the price will slowly, after this, okay, pull back to at least to the median line. It may not. All right. So you have to play it both ways. So do not assume that definitely it will do it. It may not. All right. So what am I doing here? Okay, it's a risky trade, day trading. All right, let's check the time. How long we've been talking now? Been talking a bit too much this evening. A bit excited. All right. The summer is gone in London. So we see now. Okay. So there was a vertical move followed by a diagonal move. Now I'm going to go to check whether there was some economy news. I told you that I did not check the economy news before I entered this trade. So it's a risky trade. The next thing, I did not wait for a signal before I take this trade. I just sell it now at a resistance level. It's a risky trade. Normally, so far, this is a setup. A diagonal move, a vertical move, followed by a diagonal move, probably went to the resistance level. I know other things also, but I don't want to talk about it now because it's not part of this video. We are talking about a risky day trading. All right, let's be a bit curious. We go to Google, all right, www.google.com. We're going to go to Forex Factory, and we're going to check if, okay, why suddenly we have a tall candle. Now, you have to understand that when I start trading first, I was always on a 3-minute chart, as I'm doing it now in front of you. And I don't check the economy news. I didn't bother to check the economy news. And sometimes I see a tall candle, as we see on this chart now, and I wonder where this is coming from. All right. So this is exercise, all right, is to show traders on a live chart, okay, how I was trading before and the mistake that traders are making and how they can avoid this mistake, or how they can handle risky trades, or how to become a responsible day trader. All right, it's very serious. If you want to become a day trader, honestly, take it serious. If you don't want to do it, I mean, you can do something else. Honestly, I mean, it's up to you. All right, so let's move on. So I'm going to do like I do before, Forex Factory. So I see the tall candle. Instead of checking the economy news before I take the trade, I took the trade. I'm sitting down, expecting that everything worked well for me. I cross my fingers, my arms, and hoping that everything worked perfectly. Now I see a tall candle. So now I want to know why we have the tall candle. All right, a volatile candle. Okay, you understand? If I say tall candle, we are talking about volatile candle. Let's see whether there is, okay, a very important economy news that has been released that propel, all right, so to speak, this currency pair to the upside. New Zealand. Now, today is Wednesday. You see the date here? 11th of, all right, September, Wednesday, okay? You see? So the red, there is one red envelope here. This is 5 p.m. Now the time for Forex Factory, this is New York time. So 5 p.m. in New York, there was this economy news official cash rate. If you want to know more about this economy news, we can click on this envelope here at Forex Factory, and we can read about it and try to improve our knowledge of the fundamental trading. So there was a forecast. The previous figure was 2.5%. The forecast was 2.5%, and exactly the actual figure also was 2.5%. You see, actual forecast previous. If the actual is superior to the forecast, very often is bullish. If it's inferior to the forecast, very often, all right, is bearish. Very often, not always, okay? In theory, all right? So now we know that at 10 p.m. London time, because as I'm speaking to you now, the time in London, if you check my computer here, 22:36, 10 seconds, you see? Right here. Can you see on your screen? Can you see the clock? 36 minutes past 10. So 36 minutes ago, which is 5:36 in New York, you see 17:36. The news was released at 5 p.m. 5 p.m. is also equal to 17 p.m. Okay, using the 24 hours clock. So right here, the 5 p.m. is 17 p.m. 17, okay, 100, all right, 17 hours, all right. So you can see that 36 minutes ago, I didn't. Now, I'm talking like a new trader, you understand? Okay, I'm talking like a new trader, like I was trading before. I didn't check the economy news. There was this very important news. That's why we have, okay, the tall candle, this tall candle here. Okay, now we know why we have the tall candle. Okay, let's go back to my trade. All right, I will have to pause the video at one point, otherwise I'll be talking to you for hours, okay, because this is a live trade. You see now? So the tall candle was created by economy news, so we can see that this economy news has changed the dynamics of the market. The tall candle is a distortion to a certain degree, all right, except in the third Elliott wave, okay? So that's why it's important for us to highlight the high of the distortion, the low of the distortion, and the median low of the distortion. What we have noticed, which we have talked about at www.youtube.com/JoeTrio, talking about the video that I posted there, I talk about no farm, okay? Day trading. Check the video about no farm day trading by JoeTrio on YouTube, okay? And you will see video when I explain to trader this strategy. The tall candle, vertical move, okay, followed by, okay, a diagonal move. And my trade is working nicely. You see now, it's working nicely. So remember when we enter the trade. So it went a bit above my entry point, but it's coming back. I believe in normal condition, ladies and gentlemen. That's my expectation. My expectation is that even the price will come back and cancel this one. It does not have to. So should I force it? No, I will not going to force it, okay? So if you sell like I did here, which is a risky trade because I didn't wait for a signal, all right? I explained to you why we are talking about risky trade. My first target is this horizontal line, which is the high of the tall candle at 8113. That will give me 17 pip profit. It's up to me to take that profit if the price reaches that level. Now, remember that the price can find a support here and continue to move back up. So, we know that when the price is going down, the price is looking for a better support level. That's why we have to highlight the support level. So, as if this one fails, okay, the next target level is this one here, 8094. I'll prefer that. That will give me, okay, a very beautiful, okay, 36 pip profit. If everything worked perfectly for me in normal condition, and it cancels the distortion, because after a distortion, the market will try to rectify itself. But if it finds a support above the high of the tall candle, that's very, very bullish, which means, all right, I need to close that trade very, very fast if the price finds a support on the high of the tall candle. That will continue to move to the upside big time, all right? But sometime, what you will see, that's why I say to you, I don't want to close the trade. I will leave it like this, unless they take me out. Sometimes you see it come like this, seek this one first, and then try to go a bit up before coming down. If it finds a solid support, it will just run fast. The mistake that some traders are making is that they will think that definitely it will cancel the distortion. Sometimes it does not cancel the distortion if it is very, very bullish. All right, you see now, this is about live, okay, risky day trading. What I'm going to do now, ladies and gentlemen, to avoid that the video is too long, I've said a lot already, and probably you have learned also a lot about it. So what we have done, instead of following the normal trading drill, so you must prepare yourself before you trade, okay? So if there is no reliable setup, well, keep your money in your bank or kiss your money, all right? Be selective and be defensive, all right? That's how professional trading, they don't take every trade, all right? They don't trade every time. Sometimes they can take even a month off, all right? So it's up to you. Okay, so now we know it's a risky trade. You see how the economy has changed the dynamics of the market. Some traders probably were selling this time, okay, at this point, and now suddenly stock candle. Check the economy news, because the economy news can change the dynamics of the market at any point. Okay, so I'm going to pause the video now, and we will come back to it and see what has happened. Okay, so 20 minutes so far, because we don't want to keep it at least to 30 minutes. So I'll pause it now and we will come back to it. You see the time now? Okay, we spent 20 minutes, okay, so far speaking. We want to check the time in London. It's 41 minutes past 10 p.m. In New York, 41 minutes past 5. Pausing the video and we'll come back to it to show you what has happened to our risky trade. Speak to you soon. Okay, traders, let's continue with this video about live risky day trading. We have paused the video earlier on. You can see here on the chart. All right, I hope you can see clearly. All right, so trying to zoom into the chart now. You can see we paused the video somewhere here, and we can see that the price was consolidating below my entry point, and now you can see here, and now that Tokyo is open at midnight London time, because the time in London now is 12 minutes past midnight. That's 12 minutes past 7 p.m. in New York. Now it's 12 of September in London, but in New York it's still 11 of September because of the time difference. And as soon as New York, you can see here, Tokyo was open, the price went quickly up to my entry point. But I'm still in this trade because my stop loss is 30 pips. My entry point is at 8130. Stop loss is at 8160. So 30 pips stop loss, far up somewhere here. So I'm still in this trade. As I explained to you, this is a risky trade. So what I'm doing now is just to show you what has happened since we paused the video. So we are seeing this trade. You can see the price went down, but it couldn't touch the first target level, which is the horizontal line here. So we leave it again. I'm going to pause the video again for the second time. But before I pause the video, we want to check the time. It's now 13 minutes past midnight in London. That's 13 minutes past 7 in New York. Talking about live risky day trading. I'm going to pause the video for the second time, and we will come back to it to show you what has happened. Okay, so one thing also I will do is to put a line there where we stop. I pause the video so we can see what has happened after we pause the video. So I'm putting a vertical line here. Okay, so remember this vertical line, and we will come back to it soon. Pausing the video. Okay, traders, what's happening here? As you can see, it has been a long time. We put a vertical line. Now you see we stopped here before when I put the vertical line. You can see that the price went above my entry point. Now you have to understand that all right, Tokyo was open somewhere here. Okay, let's see now. All right, and then Hong Kong was open at 2 a.m. Eastern London time. Okay, 2 that's 9 p.m. Eastern time. If you check, yeah, somewhere here, this is the time. This is where Hong Kong was open at 2 a.m. London time. That's 9 p.m. Eastern time. All right. And you have to understand that these are mistakes that a lot of traders are making, because I took the trade around 10 p.m. London time. All right. So in normal condition, when we are day trading, we should wait for the market to open first, because if you want to trade the Asia session, you must wait until Hong Kong is open, somewhere here. All right. But what I have done, as I explained to you, this is a live risky day trading to show traders, okay, some of the mistakes that most new traders are making, all right? Because if you enter the trade before Tokyo is open and also before Hong Kong is open, you are likely to see, okay, the crowd will come into the market and they will play it again, because the market was bullish before a market is open. The crowd knew that, okay, there is a bullish news. They will play it again. These are speculators. They will push the price up again, okay, before the professional will start, okay, making their decisions, all right? So here we can see that the price was going below my entry point first, and then Tokyo was open at 7 p.m. Eastern Time, where I put my vertical line here, the black vertical line, okay? And then Hong Kong also was open at 9 p.m. Eastern Time, that's 2 a.m. London time. But you can see that my stop loss, as I explained to you if you watch this video from the beginning, my stop loss is at 8160. It's over here, you see. So the price was coming near my stop loss. I didn't want to close the trade, you can see here. But as I explained to you, this is a risky trade. That's why I used 30 pips. So you can see the price tried to come near my stop loss, but it couldn't touch it, okay, which is good. So I'm still in this trade, all right. And the price now returned back below the entry point, all right. I will not close this trade, okay. I will wait, okay. I think the price will cancel it completely, even to this point here. All right, the risk reward ratio is excellent, which I explained to you at the beginning of this video, okay. But I will wait at least the price to come to 8093. That will give me 36 pips. Even to, if you move down more, what I will do, my strategy is this, okay, for this trade, though it's late in London now. I'm not going to stay here watching the trade, so, but I will leave it on, all right. The best approach to control the risk, as soon as the price come down to 8100, that's 30 pip profit, you will move your stop loss to break even, which means you move your stop loss from here to the entry point if the price move down to the 8100. So the price moved down 30 pips, you move your stop loss also 30 pips to have okay, a zero risk, all right. This is what you should do, okay. And also, I mean, normally if the price comes to the median line of the tall candle, you may decide to take some profit. Right now, where is the price? The price at the high of the tall candle. As I explained to you, see, this is the high of the tall candle. See how the price went above it, but slowly, but gradually went back to this the high of the tall candle, which we highlighted at the beginning of okay, this video. The median line at this point in time, trader will decide to take some profit or secure their gains, okay. But in my view, the price will come back down to this level here, all right, because I check other things, but we will see. As you can see here, this is the crowd, this is the speculators, and one must respect also the opening bell, all right. So this is just to show you, okay, a live, a risky trade. I will not close the video. What I will do again, all right, I'll move my vertical line to the point where we are pausing the video, and I will just go and rest, okay, myself, all right. And tomorrow morning, okay, when I get up, I will tell you what has happened, whether our target has been reached or not. So everything will remain in place like this, okay. So now I will pause the video, okay. Pausing the video for the second time, and this is where we are stopping. Remember everything. And the mistake that a trader will make at this point in time is to violate or to disregard the opening bell. If you are trading the Asia session, it's better to wait until Hong Kong is open. Suppose you were here, you knew that you should sell. Do not sell. Just wait until Hong Kong is open, and then look for opportunity to sell. As you can see, this is the reason why the price went above. Almost will take me out. I was lucky here because the price can even take me out only to come back down and move down to, okay, my target point. Okay, so this is to show you, okay, a live, a risky day trading. Pausing the video for the second time. Hello traders, let's continue with this recording. It has taken a lot of time, and since yesterday night. Okay, let's continue. So I left the trade okay, open, so we can see what has happened. We left moments please. Okay, what I will do now, okay, I'm going to 1 second please. Okay, you see the vertical line here. Yesterday that's where we stopped. Okay, so I left the trend open, so you can see my stop loss is the turquoise line here, and you can see the price slowly but gradually try to come and take me out, but it couldn't. You see here, it couldn't touch my stop loss here. And now what has happened, the price crashed back down even up to the level of 8108. Okay, 8108, and I took my profit straight away. Why? Because of economy news, the unemployment claim in the United States, the unemployment claims, the forecast was 332,000. Okay, but the actual figures was 292,000. So in this case, because we are talking about the number of people that are unemployed in the United States, so if the actual figure is less than the forecast, it's bullish, because we want to have okay, less people out of job. Okay, so the forecast was 332,000 people, but the actual figure was 292,000, which is less than the forecast. This is bullish because we are talking about the number of people, okay, that are claiming okay, benefit or claiming unemployment claim United States. All right, so this economy news that was released exactly at 8:30 a.m. Eastern Time. Today is all right, the 12th of September 2013. So the time now is 36 minutes past 1 p.m. in London, 8:36 in New York, 12th of September. We entered the trade yesterday and we left the trade on. My stop loss is the turquoise horizontal line. And you can see the price came very close, okay, 4 pips away from my stop loss, but it did not take me out very nicely. And as I told you, this is a live risky day trading. All right, we explained to you why it's a risky trade. And again, you can see that we remain in the trade until London also was open. London was open at 3 a.m. Eastern Time. That's 8 a.m. London time. So you have to understand what was taking place, okay, today. And the price, as London did open, okay, the price, okay, start going up, okay, went near my stop loss, but okay, I was lucky here. This is a risky trade. And now because of the unemployment claim data, okay, and the price, you can see the tail of this candle, and it crashed back down, okay, up to the zone of 8108. And because I was watching the screen, I took my profit straight away. All right, that was not too bad. My entry point was 8130, and I came out with 24 pips. That's not too bad, isn't it? Okay, not too bad. But still, as I explained to you, we are expecting, I will look for opportunity to sell again. All right, why? Because, okay, why should I sell again? So I'm going to remove this vertical line here, and we're going to continue with this live risky day trading. And as I showed you yesterday, this economy news that was released yesterday night, talking about in New Zealand, okay, if you were here, all right, was bullish for New Zealand, okay, the official cash rate, okay. So we will draw, because of the distortion, the distorted candle, we will draw, okay, highlight the high, as I explained to you, the media line, okay, roughly somewhere here, and also the low of the tall candle. You can see that today, as the price after the economy news regarding United States, the unemployment claim, the price ran very fast, okay, and it touches okay, the high of the distorted candle. Can you see the distorted candle here? Let me remove some line here, and then maybe you can see it. Okay, let's be okay. I'll put back my media line. My apology to traders because this video has been very long, but I did it on purpose to show you what is happening, okay, in a real time when we are trading, okay, what we need to pay attention to. Okay, we are on a 3-minute chart. It's becoming a bit difficult for me to show you everything. So what I'm going to do now, I will change my time frame and I will go to the, okay, let's go to the 5-minute chart and see whether we'll have a better picture. This is it. You see, this is a 5-minute chart. And because I was on a 3-minute chart, my candle, my tall candle, the high was here. But on the 5-minute chart, the high is here. Okay, do you understand? Okay, let's go back again to the 3-minute chart. You'll see what I'm talking about. Okay, on the 3-minute chart, the tall candle, as you can see here, alright, is 2 candle. Okay, the high is somewhere here. We move it up a bit. Okay, followed by another candle before, okay, it went up. Okay, all right, so now the first target is hit, which is the high of the tall candle. I will look for opportunity to sell again, and I believe that we'll see a total retracement. There are other reasons why I think this currency pair should go down more, but we will not talk about it. But so far, this is just a risky, okay, a day trading. And as you can see, since yesterday, because of the bullish economy news relating to New Zealand, most of the market participants were busy buying this currency pair. But in my view, they shouldn't be buying it now. They should sell it, and we should expect a kind of a pullback into this zone here. All right, so successful trade so far, and just to show you what to look for. And also, the key thing to summarize this video, we must always look for a valid setup or a reliable setup before we take a signal, which I did not do in this video. We should check the economy news, which I did not also pay attention to in this video. This is to show you a risky, okay, a day trading. And also the opening bell. We see yesterday night, okay, that we took this trade before Tokyo was open, before, okay, Hong Kong was open, and we were stubborn. We were still in this trade. Normally what I say to traders, when you are trading the Asia session, is day trading during the Asia session is to close your trade before London open. I was stubborn. I didn't close the trade. As you can see, as London opened today, right here, okay, the price tried to take me out. I was just lucky here, as you can see, and they didn't take me out. And finally, another economy news was due, and it bring the price, okay, to the high of the tall candle. Once the price, my strategy now, if I want to sell again, I will allow the price to go below the high of the tall candle, okay, go below the high of the tall candle, and then to come back and retest it. What I will do, because I'm on a 3-minute chart, I may switch to the 1-minute chart to zoom into the price if I want to take a very tight. You see on the 1-minute chart, this is what 1-minute chart, this is the high, which is the black line here. I'll prefer it to go below the black line and to come back and retest it and give me a clear-cut sell signal. This is still a risky trend, and we will be looking at the second target, which is the median line of the tall candle. All right, step by step. All right, I hope you have learned something from this long video, okay, and we'll put it to use, okay, to avoid, okay, the same mistake. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.